So, just going back to down payments, you said you paid 3% on that first house, and then the last one you mentioned, you said 25% down.
Yeah.
Do you have any recommendation as far as like sort of the opportunity cost of cash, where you could put 20% down and your payments less, but then you forfeit a lot of that cash that could be put maybe into
Exactly.
like other investments. So, what do you kind of look for? Do you look for the increased down payment, and then you also mentioned the method where you just buy the cash outright, but then there's opportunity cost with that as well.
I
So maybe if you
agree.
could touch on that for a second.
So it's very individual. Okay. If you need a place to put your money in a safe environment, it actually, in my opinion, it's a very safe investment. You have, even though you had the crash of 2008, if you look at a house that crashed in 2008, it's succeeded its value at it was at that point at now. And we're only 10 years, or I guess by now we're 12, 13 years out. But to me, that's not very long when you look at what a
Yeah, not at
stock
all.
does over time either, right?
Right.
You
Yeah,
know,
we
or if
always
you,
talk about that as well with
yeah, or if
stocks. Yeah.
if you sit on gold, or if you sit on any other really safe investment, your growth is minimal too. And I love the idea of a tangible asset, and I love my control. So when it comes to value in cash, like I chose to buy my houses by sacrificing a little of my own personal time because I was like, I don't want to spend 25% down. I want to
Mhm.
spend as little as possible. And then that way I can keep the cash and put it into another property. That's why I was buying the ones about every 2 years is what I've been buying one at. And the only reason I haven't bought another one is because I think the market's a little inflated right now.
So, do you think that increases your risk by doing 3 or 5% down rather than 20 or 25%?
For sure. Because I have no margin, right?
Right. Yeah.
But
Right.
again, like I also have I don't I have that to grow over time. Okay. And they're gonna pay it off for me. So at the same time I'm like, okay, if I had 5 grand, or let's say I had $20,000, and I, I have, and I want to put it where I want it to grow over the next 30 years. My mind's eye is like, I have to put that in a retirement account because I get to be more conservative. It's got to sit there for a long time. Where with my house, if I get sick of it, I can sell it, take the equity back out, and do something different.
Mhm.
Okay. And it's not going to, especially in most housing markets right now, we're not having this giant surge like we are right now in the market. So I'm not like, crap, what's my house valued at today? You know, is it going to depreciate by 30%? No. I mean, it might go up, down 5% every given year, but it's stable, in my opinion. It's a very safe bet. So if I dump cash into it, I've got more equity, I have more I can do. But also, once you put 20,000 or 20% or 25% into a house, unless you sell it, you can't get it back out. So at the same time, you're tying up your cash. So I really liked the lower for me to pay. And yes, there was a couple of fees that you have to incur, like mortgage insurance, right? So because I didn't put a bunch down on my other houses, you have mortgage insurance. But there's ways to creatively get around some of that I really like. Listening to other people, that's one thing I did a lot of. I listened to a lot of other podcasts who that's is all they talk about.
Mhm.
And there's so many great ideas out there that are safe to do. Let me tell you about my second deal, and I'll give an example why.
Yeah. Great.
So, so I started working for a major hospital system, and I started by learning just about my job that there is incredible benefits that sometimes we don't know about because we just don't know. And they have actually offered something called a 0% a loan on a home because I was a physician for this hospital. So I said, I wonder if I can do that with a duplex. So I called the first like 5 banks that recommended, and 3 of the 5 said, no, because you're not living in a single family, we won't do it. But the fourth bank I called, I talked him into it. I said, well, I'm going to live there. It's nice. You know, it's like a single family. What's the big deal? And he's like, okay, we'll go for it.
Nice.
So, yeah, right?
Yeah. Yeah.
So my second deal was even better than my first deal in the fact that, so my first deal was $76,000, tiny duplex. My second duplex was much bigger, and it was 202,000. But I actually made money on the closing. So you put earnest money down when you purchase a house to say, you know, you want to buy it. So I'd put the earnest money down, and then we'd also agreed that they would pay the closing costs. So by the time the closing happened, they had to pay me back my earnest money because I had a 0% loan. And they had to also pay the closing costs, which then came back to me in the form of a check, because just the way it worked out. The title guy was like dumbfounded, as was I when we saw all how it broke down. But I share that story only because I'm not a genius and I just figured this out. I just share that you have to dig and find solutions. Like, I could have given up on the first bank and not bought another duplex because they said no. But I kept hunting, and I found the bank who was willing to do it. And I was so grateful that one of my coworkers told me about the program that my hospital did. So your company, your job you work for, or the city you work for, may do something special. And let me share one more caveat with that, because I'm in the process of refinancing my third rental property, because I bought it at like 5.5. You'll notice you won't be able to get as aggressive rates when you're buying rental properties, because they know they can they know they can, you want to buy it, so they're like, yeah, we'll make you pay more for it, which is fine. I get it. They got to make money too. But because it's in the city of Cleveland, which is a depressed economy, I found out that my refinance, which is typically like about $3,500 to $4,000, and again, they usually won't give you any reduction in price unless you're a homeowner, right? They may cut you a deal when you're refinancing and you're a homeowner. But rental properties, they know they got you, so they won't do it. But because it's in a depressed part of the city, according to some of the new Fannie Mae rules, that bank has to carry so many mortgages in a depressed city. Right. And so they know I'm good at what I'm paying, so I'm lower risk client to them, but they're willing to pay all my closing costs. So, wow. Yeah, I'm like, so there's, yeah, right. I'm going to go from 5.5% down to 4.4% over the life of 30 years, which is fantastic. I'm saving that percentage, and not quite a half, but 1.5% or 1.25%. And then they're paying all the closing costs. So it's like, but you gotta ask. You gotta do your due diligence. I didn't know what that meant for a long time, but that just means, when they say do your due diligence, is ask a ton of questions, then ask some more, then be really annoying, and then you usually get what you want.
Yeah, just so it's almost like they're just trying to get rid of you. So.
And then you know what? It's because partly they don't even know. They don't even know. Mm-hmm. The mortgage guy that I'm working with right now didn't know about this program. So I said, no, I'm not interested when we first started talking. Then, small world, but a friend of mine who's in that bank, she knew of the deal and said, oh, you know Andrew Bang? That's so cool. We're friends. And then she called me just to say, how's your banking experience? I said, oh, I tried to work with your mortgage guy, but he couldn't help me out. And she said, well, let me take a look at it. And then he calls me back, oh, I'm really sorry. I didn't know about this deal, by the way. And so now here we are. So, yeah. And I think this is true when you start working with property management companies. You gotta call 5 of them to get the best deal. And you got to be a lot of questions. And same with if you self-manage. This plumbing problem I mentioned to you guys a couple weeks ago, that cost me $2,000. I was quoted $20,000.
Wow. Jesus.
Yeah. He said, oh, I got to replumb the whole house. And I was like, no way. I'm like, I'm not doing it. He's like, there's no other option. I'm like, yes, there is. You got to think of another one. And he's like, no, there's not. And I'm like, I know I'm being a jerk, but I'm not paying $20,000. Give me another solution. There's not another solution. I'm like, we got to call another guy to come in here. And so we're waiting about 45 minutes for his buddy to come give me a second opinion. I'm like, well, why don't you try that? Why don't you try that? Why don't you try that? And I know it's being real annoying, but he finally goes, oh, maybe we could do that. And he's the plumber for the last 15 years. Right. You know?
Jeez.
So, yeah, I mean, like with houses, it's fun. It's fun, too, because it's living and breathing. A stock, I have no control over. I love stocks. I own a bunch, but it's like I can't call in and say we should try this. We might make an increase on our profit. Yeah. Where if I'm creative, I can make more money out of my properties.